Hey, good morning, everybody. How you doing? Welcome to Forex.Today. Time for another wonderful webinar. It's a Thursday. I think it's the 27th already. Yeah, 727, baby. Day after the Fed. Sweet. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Now you're deaf. Why would you be deaf? Daft. Maybe, but deaf. Really? Hey. All right, we got Mike on his toes. Let's go. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. Thank you so much for being a client. Do these sessions every day, Monday through Friday, here at Forex.Today, with the overriding goal of helping you become a successful currency trader with skills that are repeatable, disciplined, and conservative. Because here's the business model for the firm. If I can help you become a success and you keep trading day after day, week after week, month after month, year after year, it's a really good business relationship. And we want to earn your loyalty and respect through these webinars so that we can become the prime broker for your successful Forex trading business. And I think it's a really good business model because we're good people and you're good people, so let's work together on this thing called Forex. And if you haven't already done so, please go to TradersWay.com and open an account. Oh, shalakalaka. It's funny how this thing used to be invisible, but anyways, so I'll put it up here. All right, so let's talk about it. We figured the Fed was going to hint that this bond unwind would begin. Not today. The previous meeting, they said it would start soon. So now what do we know? It's no longer soon. Relatively soon. That's it. Cool. September, October, maybe? So what does this mean? What is the Fed going to be doing? Buying bonds or selling bonds? Just want to make sure. I know this is 101, very entry level, but we got to talk about it. So yes, they will be selling. They stopped quantitative easing a long time ago. So they're essentially, I mean, it's not quite that, but if we're going to boil it down to what's happening, is it buying or is it selling? Well, in this case, it's actually selling. What was happening when the Fed bought bonds? What happened to the US dollar? Daniel says up. Wow, we got answers like all over the place. No. Dollar. What happened to the dollar? Not yields, not money supply. Yeah, but see, so like Malcolm, for example, is answering like he's been educated, went to a university, bought a textbook, listened to a professor. Which means Malcolm couldn't be farther from the truth. Malcolm! All right, yeah, so you say, yeah, USD goes down because of an increase in money supply. Great. Now go back to the chart and show me that during quantitative easing, the dollar weakened. It was so unbelievably ripper strong. It crushed the world under its weight. Yeah, well, other people, okay, so now we're getting to it, Ryan. So, Ryan, why would other people buy bonds? So some people use bonds like to raise money, but many market participants are in it to do something different, right? They're in it because they want to make money. So they buy bonds so they can sell it to the Fed. See, put it this way, if the Fed is going to buy, let's say, $100 billion worth of bonds today, bonds will go up. So you buy bonds with the anticipation of that flow, so that demand for bonds, you know, should go up because they're going to buy $100 billion. So bond prices are going to rise, so you buy, and eventually, though, you want to sell it. Buy low, sell it to the Fed. Buy low, sell it to the Fed. Buy low, sell it to the Fed, so to speak. Or, of course, you just buy it, and then the Fed comes in and raises all the prices. But you got to sell it to somebody. Okay. So now what happens? The opposite. The Fed's not in the market pushing prices up. The Fed's in the market going to push prices down. Or at the very least, how about this? At the very least, no longer push prices up. Yeah. But this fits into our conversation that we've been having for months, that the United States isn't the best place to invest in. It's already been invested in. Where were you 6 years ago? Right? So there are other opportunities around the world that probably have a higher return potential. Okay? And money's got to move. Okay? So just put that in mind. And if bonds fall, what should happen to the stock market? Okay, why? Ryan says stocks will go up. I don't disagree with that, but why? Because Malcolm read it in a textbook? You get better alpha. Flow of money, more ROI. Well, because if you're in bonds and bonds start falling, you should probably get out of bonds, which would increase falling prices even more, right? So what are you going to do with your money? You leave it in the bank, earning 0.15? Buy commodity, buy stocks, buy something, right? Some of it's going to be in the United States by virtue of being big, but many of it could be in other countries too. What about foreigners? What about foreigners that bought all these bonds I believe there were a lot of foreigners buying bonds when the Fed was buying bonds. What are they going to do with their money after they cash out $1 billion worth of treasuries? Now it's sitting in the bank account here in America, $1 billion in cash. What are they going to do with it? It's not quite that. Can you be more specific, Mike? Look for another investment. Reinvest. I wouldn't go there. I wouldn't say reinvest. I mean, reinvest means just buy back bonds back, but no. Well, Ryan says either invest it in stocks or send it home. Well, I'm getting to that part. This is what I'm getting to. They bring it home. Repatriation. There we go. So they bring the money home and then figure out what to do with it. They may have only been in dollars because they were buying treasuries, because maybe they didn't trust their local economy. Fine. Whatever. But that whole situation is probably different now than it was 6 or 7 or 8 years ago. So they cash out of the bonds, specifically because the bond market starts falling, because the Fed is dumping their portfolio. Okay, great. So prices fall. That pushes them out. Just imagine it as being a stop loss. So they're stopped out. They're sitting on all this cash. They don't want to buy into the stock market because it's at all-time highs. So they're like, well, let's bring it home and figure it out. What happens if they bring it home? More weakness in the dollar. Do you guys remember not long ago we had a conversation about trade balance and the dollar, and I said when things are good and Americans are filthy stinking rich and everything right in the world, everything in the world is right, the dollar is weak. You guys remember that? And when everything in the world has gone wrong, and it may potentially be the end of civilization, and that we will have to leave our skyscrapers in Shanghai and live in caves and run around with torches and zombie apocalypse type stuff. The dollar's strong. Right? America. Yeah. So it's interesting, isn't it? Mike's like, weak dollar, good for blah, 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 blah. No. Okay? Let's say I'm America, and I'm filthy, stinking rich, because I own everything. Great. Now what? I'm going to invest in another country because I want to own that country too. So I got to move my money from here to there, which means I'm actually selling my currency to buy whatever other currency. So that's what's happening. My currency becomes weak because I'm so filthy, stinking rich. I'm spending it. Think of the poorest countries in the world. Right? What you find is people have money buried in their backyard. They have money buried, or they have it in a coffee can in their freezer. They have money under their mattress. It's not being spent abroad. You know, if I take my money and I put it into the open market, I flood the market with my currency. But I'm buying stuff, so I flood the market with my currency, and then I get stuff. Now I'm surrounded by stuff. Look at all my stuff. I own this country, I own that country. Look at. And then someone says, oh, well, he did that to help his exports. My exports? I didn't do that for my exports. I bought TVs and cars and, you know, like, I didn't do it for my exports. I did it for my imports. I was buying stuff because I'm filthy, stinking rich. Right? That's how it goes. Yeah, well, there's the difference in culture. Mike says Japan needs people to spend, which you're, you know, sure, I'll go with that. But here's the thing. The CEO of Sony America makes something like 5 times more money than CEO of Sony Global. Because in Japan, it wouldn't look right to be paid so much, be so ostentatious. Yeah. But in America, you weak if you don't make the big bucks. So I don't know, whatever. It's all interesting. So yeah, there is a thing. The culture is different. All right. So anyways, that's that. So the world freaked out. It's the end of the world. It's the end of the world. The Fed said relatively. They added relatively to their language. Hey, Ryan, imagine a world or a country. How about this? Imagine a country run mostly by robots, and they have no natural sources of energy. Well, I mean, they have sun and wind, but they got to get going on something on that. I never understood why Japan isn't like the leader in green energy technology. Like, when I say solar panels, you should think Japan. When I say geothermal, you should think, oh, Japan. When I say wind technology, you should say, oh, Japan. Japan's just like the leader on all this. And it's all their robots. Because how do you feed a robot? Energy. Wave tech and stuff. But I don't think those things. I don't think, oh, well, that's Japan. I mean, everybody knows that. Well, they turned off their nukes after the tsunami, which I thought was like crazy ridiculous. Do you know how much money they spent on importing oil? What percentage of GDP? Puts it into perspective. What percentage of GDP did they spend on energy when they had to turn the nuclear power plants off? All right, well, feel free to correct me if I'm wrong, but the way I remember it, it was 100%. All their money, everything, went to energy. Now, I might be wrong because you guys are saying 0.5%, 20%, 18%. Well, Ryan says 18% of imports, but at the time, oil was not cheap either, but whatever. It's too much. They can't survive in a scenario like that. Yeah, but I'm talking what percentage, how much money, not how much weight per se. You know what I mean? But I'm talking about money. So for example, if 18% of their imports were nanocarbons, then by volume, it'd be trillions of trillions. A trillion. Because it's $600 an ounce or something. $900. Yeah, let's say it was gold by volume. You know, but whatever, you get it. So anyways, they spent a lot of money, too much money. Gee whiz, Harvard crazy. All right, so yeah. So anyways, end of the world. The Fed said relatively soon. Oh, but look where we are. Isn't that funny? Did the world freak out? It's the end of the world as we know it. Isn't that just gorgeous how it still uses the pivots? Okay? I want to use black. Oops, it's a little low. It should be a little higher. Oops. So to me, this is all role reversal stuff. Straight out of price action school, huh? How many people are spending more time on price action? Me. Cool. Cool. Yeah, and with Brendan says with pivot. See, what happens is, see, we've gone through this before where I say, I don't have it here. So we'll throw it down, okay? You start with something like this. This is enough information to trade successfully. Okay? And what do you do with this? Well, right? So double bottom, breakout. So there's the double bottom, 1, 2, 3. Grab it across. There's your new buy zone. Makes new higher high. Grab that. There's your new buy zone. Makes new higher high. This is your new buy zone. Didn't quite get it, but it's the logic. Jesus Christ. Hang on. Stupid WhatsApp group. Bloody Harvard bastards. All right. Okay, new higher high. Oh, we already did that. New higher high here. Drag across, new buy zone. So on and so forth, right? So that's price action, right? Double bottom, higher high, buy. Higher high, buy. Higher high, right? Higher high, buy. Higher high, buy. Whatever. And you do this for whatever, forever, in a day. Great. What are other things that are important on a chart like this? Do things like, hang on, I'm going to put this back to red. And then 83. Oops. $84. 82. Okay. Psych levels. Anything else? See, now we're adding these little levels. We're adding layers, if you will. We didn't need those, but now that I add them, they seem to be important. Okay? And so what we're doing is we're looking for levels of support and resistance along with price action. Okay? We can also, let's say, indicators, best of. Okay. We can add another layer of complexity. Here I've added monthly pivots. Maybe they're helpful. Maybe they're not. Maybe you don't like these. Maybe you choose different pivots. Okay? And now what you're doing is, again, you're adding layers of complexity. Right, you can throw in an oscillator. Yeah, so all these things. But do you need the oscillator? No. Do you need the pivot points? No. I like them. Do you need the price action? Yeah, you kind of need the price action. I do like the pivot points. You know that. Do you need the 2155 cross there? No. Could you use a 5-8 cross? Yeah. Do you need that? No, not really. Do you need the oscillator? No. Like a stochastics? Well, I'm experienced, so I could draw a stochastics for you in most cases just by looking at the chart. So it's not actually adding more information. I can look at it and I already get it. And what about MACD? Yeah, I could totally draw the MACD. I don't need the algorithm. I can look at the chart and I see a MACD. I see a MACD on this chart. I'm doing it with my mind, though. So at some point, you know, it's just like, what are the important things? Price action and support and resistance. And to me, the pivot points are support and resistance of the market. Price action ends up being support and resistance of price. Yeah, the moving averages kind of make things easier. You can clearly see I should be a bull. But I also know that once I'm up in here, maybe I should stop being a bull. Doesn't mean I need to be a bear, but now I know when to walk away, maybe even run, right? The lower part is a walk away, the M4. The R2 is a run. So if this gets to 84, take my money and run. But it's a process of simplification. About 5 years ago, we were working with a wonderful man named YJ. YJ had been trading for many years and was going through a period of struggle. So I had YJ do nothing but look for double bottoms with higher highs or double tops with a lower low. And he was offered a very, very, very good job for a significant amount of money. He's like, I'm sorry, man. I want to, he left. He tried to leave so he could be a full-time Forex trader, and they offered him so much money. He's like, oh, really? Okay, I guess I'll stay. So, yeah. But anyway, so I said, well, what you need is consistency, and what you need is also simplicity so that you can stay consistent. So I said, for the next 100 trades, I want you to look for things like a double bottom, and then I want you to anticipate the higher high, and then you have permission to wait further and pick it up on the pullback, and that's where you buy. Okay? So he'd be buying here. Okay? There's the double bottom, there's the 1, 2, 3, and here's his entry. I said just do that 100 times. Either bullishly or the same thing in reverse bearishly. And the reverse part would look like sell, 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 sell. Okay. Yeah. No, he was a good trader and a good man. Ah. Ah. And the rest is just maybe noise and complications that we don't need. Okay? Now, the strategic and tactical part comes from, like, for example, if you're bullish, it is proper for you to assume that this is a buy zone. Okay? So you should anticipate a bottom. Okay? So you see one of these things, you need to have a whole hot to go HOTTOGO. Okay? So the first step is you could buy the double bottom. The next step is wait for the higher high. Once you've gotten this higher high, game on, Bubba. Game on. And you should be thinking this the whole time. The whole time. There is no other truth. So if you'd spent all of Monday and Tuesday setting this up, you'd be done. You're done for the week. That's straight out of the swing trading course, though. There's no other level of complication. And the double bottom higher high thing is so ridiculously straightforward that I want you to start with that. Right? That's what I want you to start with. And do it 100 times until you've mastered it. Okay? Gorgeous. Look at that. Right? One thing that I've always been fascinated. I'm sorry. I missed. I left out a part what I wanted to say. We were here. All right. So you start with the assumption, and that's called strategy, right? You're already planning something like this before it even happens. You're like, well, if I get a reversal pattern in this buy zone, then I need to be prepared, right? So you get the first touch. Okay, great. It's the second one that really sets it off. Once you're in that zone of double bottom is the first opportunity, okay, because you can trade a double bottom. And that's cool because you know as soon as it makes a lower low, your double bottom's failed and you're out. If it makes a higher high, then that's the second opportunity, but you don't buy here, you buy down here at the roll reversal. Okay? It's just price action. So there's two ops here, and so your first buy is here, your second buy will be here. But notice, it's only strategy. The first one is a double bottom strategy. The second one is a higher low strategy. But none of them actually put you into the trade. So how do you pull the trigger? And this might be a 1 hour chart. Right now this is 30 minutes. I don't typically use 30, but let's say it was a 1 hour chart. And we're sitting on a double bottom or quite close. Like maybe the chart looks like this. And it could either go low, but you're thinking it might go high. What do you do now? Drop into a 15. You got it. Drop into a 5. And that's why my book's called Strategic and Tactical Forex Trading, because the strategy part's set. You're thinking, all right, I might go for a double bottom on this one. So let's say price is still kind of on the central. I'll be thinking like this might double bottom, or this actually might kick off the central. You notice that I'm not thinking about selling? And the reason for that is I might have flipped a coin 6 months ago. And it tells me I can only look to buy. And if the market agrees with my bias, even though I only flipped a coin, whatever. But when the market agrees, I'm going to get paid. Okay? Oh, down in here? Well, let's talk about that later. Okay? So what I'm saying is you have no way of knowing in this area here whether the market's going to be bullish or bearish. Okay? Because the market doesn't even know. And that's why when amateurs sit around trying to figure out what the market's telling them, what they don't understand is the market isn't telling them anything. You're talking to a scarecrow. Hey man, what do you think about the market? Oh, don't be so tight-lipped. Right? Mickey says, we should be considering a double top right now. Yeah, are you at resistance? Well, yeah, then yeah, what else would you be doing? Okay. So anyway, so the market doesn't know here, so you need to make a decision yourself. And this is what, and we've had these big conversations, right? So if you're just sitting there like, okay, I'm going to be a bull this week, or actually you shouldn't do that. I'm going to be a bull for the next 3 months. Great. So that limits a lot of my choices. And if the market giveth, if the market agrees with me, if the market figures me out, we're going to make money. And if the market goes against me, probably not even going to get a trade, or if I do, it'll be a small loss. But see, that is the secret, isn't it? So anyways, you start this strategically, you're a bull. How could you possibly miss a double bottom, higher high, if you know for a fact you can only buy and you're watching this closely? The highest yielding yen pair on the platform. You just wouldn't have. Otherwise, we got some other serious problems we need to work on, right? And see, what about the bears? Someone's going to say, no, I'm a bear. So I got to find my mouse now. There it is. All right. What about the bears? Okay, they might have sold here on Sunday. Great. And then this is a Fibonacci retracement, about a 50%. Great, they dumped it hard here, right? They dumped it. Oops. They dumped it hard right there, right where they were supposed to. A little higher would have been better, but that would have been more of a 618, 786. So somebody dumped it here, and it was fine. What happened? How much money did they lose? Probably nothing. Okay? And then over here, you were supposed to buy. Could have bought it down here. Could have bought it down here. But I mean, like, dude, right? If this is your thing, if this is your currency pair, you had like I don't know. I was going to say moral imperative, but it's just like your damn job, right? So there are plenty of other opportunities. I'm just saying, if you were watching this and if you were a bull, this would have been easy. And most likely you're like, well, I don't know what my bias is, and I watch everything. I'm watching so many pairs, Wayne, that I never see a good trade. That's the problem, right? Wayne, I'm watching over 100 pairs, and I never see good trades. Well, man, right? Joseph wants to know about targets. Well, it depends on what your trade plan was. Weekly swing, monthly swing, position trade. If this was September, for example, my plan would be to get out in December. If this is July, my plan would be to get out today. Okay? So it depends on your trade plan. But the entry, regardless of what your plan is, your entries are virtually the same over and over and over again. The strategy is different based on your exit strategy. Okay? Because you got to, look, let's say you want to be in this for a month. You still have to buy at support. You still need a reversal pattern. You still need a small time frame entry, whether it's a 5-8 cross, oscillator cross, 2155 cross, MACD cross, whatever. You still need to be at support. You still need like the reversal pattern, like double bottom, maybe the 1, 2, 3. All of that's exactly the same. But where the strategy comes in is, are you going to go for 50 pips or 500 pips? Okay, and that'll influence when do you move your stop, when do you get out. Okay, but the answer is always going to be the same. So what I say is I scalp into my swings. Yeah. Oh yeah. Joseph says I did well on this the Kiwi yen. Yeah. Well, that's what the Kiwi yen is. Back closer to the financial crisis, I think the year before the financial crisis, I did so well on the pound yen over the course of a couple of months. I put a 2-hole golf course in my backyard, and I called it the pound on one side and the yen on the other. So we brought up like bobcats and stuff, and we put in greens, and it was great. We brought out I don't know 8 tons of pea gravel, and so they set up like this. They set up this green, but instead of using grass, put in this pea gravel. So anyways, you could take a wedge, let's say a pitching wedge, and you could swing as hard as you could. The ball would come up, and if you hit the green, it would just stick like a lawn dart. But it was on a slope, so you couldn't then turn around and shoot the exact same shot back downhill, because now you'd go way over. So you'd have to switch your shot. So it was great. So anyways, the pound, the yen, yeah. So the yens can treat you very well. The beast, the Widowmaker. But yeah, Kiwi yen, yeah, but that's something I sit on usually. But you know, like there's another one. We could switch this up. Here's a good one. You guys remember this one? Look, I'm long here. Wee-hoo! Sweet! Gonna sit on this forever. Okay, so this is Kiwi Swiss franc. Double dipping on this. Boom, boom. Anyways. Because Switzerland pays me money and New Zealand pays me money. Now, durable goods is a really bumpy, dumpy report. Bumpy and dumpy. Hey, look, we're back below 17. Cool. So yeah, I don't really like durable goods, but we'll see. Oh, we should do the WTI. WTF. So we hit our extreme target for the week. You could have been done 24 hours ago. And even with all this news and stuff, look, nothing would have happened over the last 24 hours. You could have been hiking Machu Picchu instead of watching your charts. You've just been done. Okay? Isn't that great? What a nice little Monday morning trade. I'm trying to get this out of the way. I can't get it out of the way. It's too big. All right, let's do. But that's cool, right? Our little Monday morning trade got to our pivot profit zone. This is the conservative target. Ah, gee whiz. Come on, Bubba. This is the aggressive target. Both played, in my opinion. Okay. Isn't that neat? So let's go in a little bit further. Scroll income. All right. Let's drop into this a little more. And what was the basis of this trade plan on Monday morning? What were we planning? So it seems to me we had talked about it, discussed. I even drew it on the chart. It's like I rang your doorbell. You answered the door. I slapped you in the face to get your attention. I said, hey, look what's setting up. 55 predicts a double bottom. Double bottom predicts a higher high. Higher high predicts a higher low. Higher low predicts a higher high. And based on this pivot strategy, we should be going to the M4R2. How many people remember that? Drew it on the chart, predicting the future, not the past. Isn't this the same setup as the Kiwi Yen that we went over? Mike, every day is important, Mike, at Forex.Today. We didn't call it Forex.Monday. Yeah. Yeah. Oh, wonder. But like, boom, right? I mean, what I'm trying to get at is that we've discussed this on a currency pair. This is a commodity. It's the same trade setup. And if you'd spent the whole time trying to figure out what oil wants to do or thinks it should go or listening to the news or reading the paper, I bet you none of this would have helped. What would have helped is you just simply said, I'm going to look for a bullish trade plan. Okay? This is the zone. This is the actual pivot, guys. So if you took the swing trading course, that's where you buy. That's it. So if you see a double bottom on Monday, what the WT intermediate, right? You're like, what? So I'm just saying there's consistency, man. This is learnable. You can get this. It's tradable. What you need is more consistency and less experimentation. CAD, huh? The CAD's been the most amazing benefactor of all of this. We got falling dollar and rising oil prices. What a perfect storm for the Canadians, eh? Well, here comes a big test. What's going to happen on the 21? What's going to happen on the role reversal? This is still the conservative bounce. It's still supposed to go up. It just didn't. Well, there must have been a perfect storm. Oh, wait, there was a perfect storm. The Fed enacting a policy of weakening the dollar, which, by the way, increases inflation. Okay? And at the same time, a bounce in oil prices and commodity prices in general, Canadians are going to benefit. Okay? So, I don't know if you're watching this or not. Okay. Isn't it funny that even with this crazy news, even with oil skyrocketing, it comes down to the weekly S2 and stops? Is anyone going to be a bull on this? Do you think it's over? Don't be afraid. Tell me. Because if that's the case, I would do it like this. We'll just play that like a double bottom. Play it like this. She told me in the morning she don't feel the same about us in her clothes. Boom, shalakalaka. So which one's right? I don't know. But if I was a bear, I know exactly what I would do. If I was a bull, I'd know exactly what I want to do. What's the market going to do? I don't know. The market's ridiculous. I don't listen to the market. The market's stupid. Okay? Interest rates have been going up in the United States. Your textbook would tell you that the stock market would fall. Oh, wait! Stock market's at all-time high. Not just one of the indices, all of the indices. And it's going to keep going that way until interest rates are so high that the Fed could not possibly raise them anymore. And that's what kills it. Not the interest rates going up. Not the weak dollar. Remember all of that? If you were around 10 years ago, there was conspiracy theories and all kinds of things about the dollar being worthless. It's a fiat currency. The euro is going to become the reserve currency. The yuan or the renminbi is going to be the reserve currency, and it's all over for America. A bunch of idiots. So anyways, the dollar's weakening. I couldn't be any happier. Janet Yellen is tap dancing through the hallways. Inflation's going up. She did her job. If Trump fires her, she'll just say, yeah, well, all I did was save the free world. And then she's going to drop the mic and walk off stage, flipping the bird. You like pineapples? How do you like them pineapples? Yeah. So anyways, trade planning. What time is it? It's time to go, man. So, simplify your life. Yes, of course, Peter. Simplify your life. Focus a little more specifically on currency pairs you actually want to trade and follow. Develop a bias so you know if you're a buyer or a seller. And identify your key levels of support and resistance using either the market or price. The rest should be easy. So namaste. See you guys tomorrow. Thanks for being on my team, and thanks for being a client to TradersWay. If you haven't opened an account yet, go to TradersWay.com, open up a demo. Oh, and by the way, there's a coupon code now for people with demo accounts at TradersWay. It's only around, I think, till the next weekend, so like 8 days or something like that. So if you have a demo account, you can call up TradersWay support or email them and ask them for a coupon code. It's only 60% off, though. Live account holders received a lot more than that. So anyways, peace on earth. May the pips be with you. May our profits be above average.